after a while that we've seen a metal company come to the markets to raise funds for their IPO. And the market certainly seems to have greeted it quite generously, because integrated metal producer Shyam Metalics has firstly seen great subscription numbers to its IPO, and secondly, on its debut on the Lal Street, it has seen a good listing pop as well of 24%. So yes, the 909 crore rupee IPO that Shyam Metalics had launched was oversubscribed, and how. And now today it saw a listing day pop of 24%. It listed in fact at 380 rupees, went as high as 394 rupees as well. This versus the issue price of 303 to 308 rupees per share. The issue, remember, was oversubscribed 120 times. So there were very few lucky shareholders and demat account holders out there who got their shares for Shyam Metalics credited in their demat accounts. And remember that the street has liked a couple of factors when it comes to Shyam Metalics. Firstly, the sentiment is pretty strong around metals. Of course, we are facing some trouble in the commodity complex because of the China factor. They've been releasing some of the state reserves of metals into the market. But otherwise, so far, metals still are pretty resilient. Let's not forget the fact that it has strong backward and forward integration as well. More importantly, it has very little to zero long-term debt. Whatever debt is there is actually working capital debt, which is, by the way, one of the areas and arenas where Shyam Metalics will be utilizing the fresh issue proceeds. Plus, apart from that, also general corporate purposes. But yeah, the financial strength of this company is among the best, especially in the long steel space. It has proximity to raw material sources, to key demand clusters as well. And then it's got this captive power plant. It's got a captive railway siding. In fact, when we had spoken to the VC and MD of Shyam Metalics, Mr. Brijbhushan Agarwal, he had said that for metal companies, costs are the major mantra. And yes, it does not have captive mines, but according to Mr. Agarwal, the mines that have been auctioned were actually pretty expensive. And the biggest advantage that Shyam Metalics has is that they have a captive power plant. And, for ferroalloys, power is a very, very big cost component. Now, as per brokerages, a possible risk component is region concentration, because we have a big chunk of their operations and revenues coming from the eastern part of India. So any adverse developments affecting this region could have an adverse effect on the company's business and operations as well. And Axis Securities says that another key risk, of course, is if the company's suppliers are unable to provide the required raw materials like iron ore, fines, coal, chrome ore, etc. Plus, obviously, the usual cyclicalities associated with steel prices.